Good morning everyone and welcome to another RF Crypto video. Today's markets have seen a slight increase. It's almost negligible, less than 1%. Your global crypto market cap currently standing at around 870 billion. Bitcoin is still at depressed rates of 19,275. Ethereum has inched closer to $1,000. It has lost 13.9%, almost 14% over the last week. Similarly, Bitcoin has lost 10% over the last week as well. Remember that about 2 weeks ago the prices started recovering and we saw Bitcoin heading to 20, even 21,000. However, we have seen a reversal of this and the markets have corrected themselves. The markets continue being depressed due to risks in the markets and risks around the world in terms of geopolitics and social as well. Looking at the price of Bitcoin, it is trading around the $20,000 level now. It's trading between the $18,000 support level and the $20,000 resistance level. However, the movements are very lateral, they're very flat. We aren't seeing any movement at all. It seems like things are going sideways while people consolidate the risk. They see where the market is going, and the riskier the markets, the less people are willing to trade. Obviously, we have seen massive trades here, but this was because of people de-risking and pulling their money out of the crypto market into safer assets. However, since then, the markets have traded quite laterally. Nothing much has changed in terms of risk. Actually, it has gotten worse. That's why you have seen a downwards trend, but the movements aren't drastic. Looking at some news, the Atlanta Fed GDP tracker shows that the US economy is now likely in a recession. So a tracker of economic growth is pointing to an increased chance that the US economy has already entered the recession, even though it hasn't been officially announced yet. Many Wall Street economists are pointing to the fact that there is an increased chance of negative growth ahead or a recession, but the figure won't come until at least 2023. And this recession risk is one of the reasons why the stock markets and the crypto markets have been so depressed and have been seeing massive losses. However, now the Atlanta Fed's GDP Now measure, which tracks economic data in real time and adjusts it continuously, sees second quarter output contracting by over 2%. Coupled with the first quarter's decline of 1.6%, that would fit the technical definition of a recession. So a technical definition of recession is 2 successive quarters of negative growth. So in the first quarter of 2022, the US economy declined by 1.6%. Second quarter, they estimated to be declining by 2.1%, 2 successive quarters with negative growth, a recession. And data this week showed further weaknesses in consumer spending and inflation-adjusted domestic investment, which prompted the cut that put April through June period or the second quarter of 2022 into the negative territory. So when consumption decreases and when investment decreases, GDP decreases as well. And because those two are the biggest factors in GDP, then it means that the economy has contracted. And one of the reasons is an increase in interest rates. Since March, the Federal Reserve has increased interest rates by 1.5%, with more increases likely to come through the remainder of the year and perhaps into 2023 in the hopes of controlling inflation. When your interest rate increases, the rate at which you can borrow also increases, so money becomes more expensive. When you make a loan, you pay more interest on that loan. So people tend to consume less because they can get less money. Also, at the same time, people tend to save more because they tend to get a higher amount of interest for the money that they keep in the bank. So in terms of consumption, there is a double effect. And in terms of investments, there is a decreased effect because usually investments are made through borrowing. And if borrowing gets more expensive, then companies and even governments tend to borrow less, which means that there is less investments. Hence, the combined effect of decreased consumption and decreased investment has led the GDP growth into negative territory and into a technical recession. And at a panel discussion earlier this week, Jerome Powell was asked what he would tell the American people about how long it will take for the monetary policy to tackle the surging cost of living. What he said is that he completely understands and appreciates the pain that people are going through dealing with higher inflation, which is standing at over 8%. What the Fed wants is to decrease this inflation rate to 2%. The process is likely to involve some pain, but worse pain would be from failing to address this high inflation and allowing it to become persistent. So what Jerome Powell is saying is that you might face some short-term pain, but this is to combat long-term pain if inflation was to become permanent. So suffer a little bit so later we can control inflation rather than have inflation running away and prices increasing every month. On some other news, Ethereum average gas fees fall down to $1.57, which is the lowest it's been since 2020. Remember that starting in January 2021, Ethereum gas fees surged and it was roughly $40 for each transaction. And this was due to the fact that NFTs were taking off. Decentralized finance was hyped up due to the bull market. These two things combined caused a lot of activity in the Ethereum network, which obviously caused its gas fees to go up due to massive congestion. This drop in gas fees at the moment from $40 down to $1.57 coincides with the lowest daily sales of NFTs in 1 year. The NFTs ecosystem recorded its worst performance of the year in June, as the total number of daily sales fell to roughly 19,000 and only estimated at a 13.8 million value. We can see here how it massively peaked and how it massively decreased. And that's why the Ethereum gas fees have decreased so much to the point where it's only 1/40th of what it was at its peak. On other news, USD stablecoin premiums surged in Argentina following economy minister's resignation. So Argentina, which is a country with the highest crypto adoption rate in South America, with 21% of the people saying that they used crypto in the last year, saw the price of dollar-pegged stablecoins surge across exchanges on Saturday after the abrupt resignation of its economy minister, Martin Guzman. So what has been happening is that Argentinians have been piling into crypto as a means to hedge against the country's rising inflation and the continued depreciation of the Argentinian peso, its official currency, against the US dollar. And we are seeing inflation rates of 60 to 70%. So that means that if people have money in the bank, every year it's losing 60% of its value. So rather than have their money lose value, they're converting all their pesos into a USD stablecoin. And like that, it preserves its value better than the Argentinian peso. So if someone has $100 worth of pesos and they leave it in pesos, in a year's time, it will only be worth $40. However, if they convert it into a USD stablecoin, that $100 today will be worth $100 in a year's time. And that's why people have been going into it. And the increased demand of USD stablecoins have caused a massive premium in its price, because demand and supply always rules the markets. So there is a 116.25% premium compared to the current fiat exchange of USD to Argentinian pesos. It's just incredibly massive, and it just means that people have lost faith in the Argentinian pesos and they're turning to crypto to preserve the value of their money and their capital and in order to survive. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.